Hey guys, this is Henry Gamble with SimplerOptions.com, and in today's free video I'd like to spend some time on Tesla. So Tesla has some interesting things that are going on with it, primarily off of the daily and the 4-hour chart, but to start the analysis I always like to start with the weekly because you can get a lot of information here, and the main signal that we're tracking right now is the fact that you've got a weekly squeeze that is fired. So a very powerful signal. At the moment we're only 4 bars in, so if the signal is going to last 6 to 8 bars, we could see some continued strength from Tesla, and that's kind of a good foundational chart to get started with. Then when we move into the daily, you've got a lot going on here, and you might say, well, there's no squeeze on the daily. The squeeze on the daily actually exhausted a while back, so why are you wanting to play it? And we'll get down into our actual trigger signal off this after we discuss the daily. But even though that squeeze is exhausted, a great thing you can do here is hide your studies to kind of just give you just clean, straight up price action. And some of the stuff that I found to be so helpful with Fibonacci analysis, and in this case a little bit more of symmetry, is looking to the swings that precede big, drastic moves. So in this case, for Tesla, I see this decline, basically this last little move down into about 210 or so. That was the last serious decline that the stock had before it made this ascent up into 270. So essentially this corrective decline is a very important swing. You take this point value, which means whatever it is, and of course using the symmetry tool on this it will do it for you pretty much automatically. Another handy feature is if you use the trendline tool, you can click from this high to low, and then it will give you essentially a pop-up box that says, okay, that decline took a total of 4 bars, corrected 6% to the tune of $15. Then you come over here and you're looking at this decline, and it didn't take quite as much as far as time is concerned, but notice that that also was a $15 decline. So a very strong trend, pulls back down into symmetry support. Friday has a pretty nice close, and now we get this type of move today. When you're coming back up through what would be essentially this high to low, and you clear that 618 retracement, that helps increase the odds of going on into the 1272 extension. Now we didn't quite clear the 786, which will be the last ratio that we really pay attention to as a potential area of resistance. Once it can get through that, I think it will be able to make a quick trip into 270. 271 will be our actual target. And then if you come back down and say, okay, that all looks pretty good off the daily, but there's no squeeze. Usually when you're trading directional options, you want to focus on a squeeze. Then if you drop it down into the 4-hour chart, you can see where the signal is forming. So I think those are all pretty good technical levels. Of course, the idea is based off the fact that those lows do need to hold for the setup to stay intact. If that breaks, then I'll have to be out of the position. But another thing that we talked about is an aggressive and a conservative way to play it. The conservative way would be to step out into September and sell a put credit spread. The aggressive way to do it, something that you might see John do, is buying directional calls on the weeklies that expire this Friday. A quick thought process that I had behind that, just showing some of the numbers behind the squeeze. So if you know you've got a 4-hour squeeze, well, of course, you multiply that by the number of minutes, so 4 times 60 is going to give you the number of minutes that you should see in a given bar. Easy enough. We suggest that the squeeze is going to last somewhere to 6 to 8 bars. So let's err on the side of being cautious and say it's going to take longer than we expect to complete the signal. So let's say the upper end of that range is 8. So I'm looking at this 4-hour chart and suggesting that it could have strength for the next 1920 minutes. We know there are 390 minutes in every cash session, so if you divide those two, that's going to give you almost 5, 4.9. So it's saying that this signal should provide strength for the next 5 days. Now we only have 4 left in this week, obviously, because Monday has just come to a close, but that's a way you can look at a particular signal, think about how much strength it should give you for how long, and then make sure you're choosing contracts that coincide with that. So I hope you guys find that helpful, and we'll see you at the next free video. One thing that I wanted to make you guys aware of is a webinar that we're going to be having tomorrow on the ABC waves. So it's going to be Tuesday, August the 26th at 8 p.m. Eastern Time. That's 7 p.m. here Central, where we are located. The webinar will be covering why the waves are some of the favorite things for John to use, the best way to figure out which direction the squeeze will fire, and just kind of some of the intricacies or nuances that he picks up with on this indicator. So I think it'll be very helpful. We do have a couple other things that we're going to announce during that webinar, so if you've been using the indicator or have any interest in checking out the information on it, all you have to do is give us your name and email address. You can register for that entirely free, and then hopefully we'll see you guys on Tuesday afternoon.